Today, I would like to analyze Celsius, one of the largest energy drink company in the world. We had an incredible performance in the last 5 years. We are up around 1,927%. So this is an incredible performance. But if we're going to take a look from the chart from 2024, we are down close to 63%. So we're going to take a look at the financials to find out if it's a good buy right now. The first thing we can recognize is a market cap of $8.88 billion US. This makes Celsius the 40th largest beverage company in the world by the market cap. Now we're going to take a look at the financials. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business and not a declining business. In 2020, the revenue was around $130 million US. This was a strong increase around 73% from 2019, but still a very small company. In 2021, we saw the incredible growth around 140%. In 2022, we saw the incredible growth again around 107%. And in 2023, we saw the very strong growth around 101%. But then in 2024, we just saw the growth around 2.85%. This is not very high. But overall, I would say in the last 5 years, we had an incredible growth. So it's a check here in revenue growth. The next thing we're looking for is free cash flow growth in the last 5 years. The free cash flow is very important because it can be used to pay the dividend, to pay the stock buybacks, to invest in the business, and also to pay back the debt. In 2020, the free cash flow was around $2.8 million US. So this was a strong increase around 195% from 2019. In 2021, we saw the negative free cash flow around $99 million US. So probably this company invested into new factories. In 2022, we saw the strong free cash flow close to $100 million US. So this is very good to see. In 2023, we saw the strong increase close to 24%. And then in 2024, we saw the incredible growth around 93%. So I think this company had a very good free cash flow growth in the last 5 years. So it's a check here as well. The next thing we're looking for is a free cash flow yield over 4%. So this can also tell us about the valuation of this company. The higher the free cash flow yield, the higher the indication for undervaluation. So we want to see a high free cash flow yield. So we're going to calculate it for 2024. So we're going to take the free cash flow from 2024. So this is around $0.24 billion US. We're going to divide it with the current market cap, $8.88 billion. Then we're going to get the free cash flow yield for 2024. So the number we're going to get would be around 2.7%. So this is under 4%. It's not very high, but we can also expect the free cash flow to grow in the future. So I think we should also make some assumptions about the free cash flow in the future. If we ask ChatGPT, we can see here in 2026 we could reach around $293 million US. In 2027 around $381 million US. So let's assume for 2027 we can reach around $380 million US. So let me know in the comment if this is realistic. Then we can divide it with the current market cap, $8.88 billion. So then we're going to get the free cash flow yield around 4.27%. And this would be already over 4%. So I think this could be an indication for the fair valuation. But of course, probably we expect the free cash flow to continue to grow after 2027. So this valuation could be attractive. The next thing we're looking for is the debt to free cash flow ratio under 5. This means the company can repay the debt with a free cash flow in under 5 years. A very important number because if a company has too much debt and cannot repay the debt, it can risk to go bankrupt. So first we're going to take a look at the long-term debt. This is around $17 million US. Then we're going to add the short-term debt as well. We can see here around $3.3 million US. We're going to divide it with the current free cash flow, $240 million. And then we're going to get the debt to free cash flow ratio for 2024. So the number we're going to get would be around 0.08. So I think this is an incredible number actually. It's not take many months to repay the debt with the free cash flow. So it's a check here and we like to see that. We can also take a look at the cash on hand, how much money this company has in the bank. And we can see here around $890 million US. So this is a huge amount actually, and I think the balance sheet is look very good right now. This money is close to 10% of the market cap as well. So I think this is incredible and we like to see that. Now we want to see the enterprise valuation to free cash flow ratio under 25. So this can also tell us about the valuation of this company. The lower the number gets, the higher the indication for undervaluation. So first we're going to calculate the enterprise valuation. This is the current market cap. So this is 8,880 million US dollar. We're going to add the debt. So the debt is around 20.3. We're going to take minus the cash. The cash around 890 million. So then we're going to get the enterprise valuation for this company. So how much the whole company is worth. So let me calculate this quickly. So the number we're going to get would be around 8,010 million. So now we're going to divide it with the current free cash flow. This is around 240 million. So then we're going to get the ratio around 33.37. So yes, this is over 25, so we would like to see it under 25. This could be an indication for overvaluation, but of course this is a young company, so we're expecting the free cash to grow. So with our free cash flow assumptions for 2027, this was 380 million. Then we're going to get a different number as well. So now we're going to get would be then around 21.07. So yes, this number is under 25, so then it would be a check. But right now it's of course it's higher than 25. So I think if we expect the free cash flow to continue to grow, I think the valuation could be very good right now. But of course it's about the expectation as well. If you assume the free cash flow to decline, then I think this company does look overvalued right now. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. We like to see that especially we think the company is undervalued. So this right now is a very young company. So usually the shares outstanding increase over the time because they need more money to invest in the business. But this company also has a great balance sheet. They already have a lot of money. So actually they could afford to buy back their own shares. We're going to take a look here and we can see here 2020, 0 repurchase of common stocks, and in 2024 it was again around 0. So this company doesn't really buy back their own shares, but I think it's also understandable because it's a very young company as well. I would like to give my conclusion about this company, so let's start with a positive. So I think this company has a great revenue growth in the last 5 years. Of course, in 2024 it was not very high, so we would like to see that higher actually. But this company also has a great free cash flow growth. This is something we really like to see. The balance sheet is looking incredible actually. We have a low amount of debt and a good amount of cash on hand. The cash on hand is around 10% of the market cap, so very high actually. The free cash flow yield around 2.7% is also looking quite good because it's still a small company and we expect the free cash flow to grow in the future. In 2027, the free cash flow yield could be around 4.27% with our free cash flow assumptions, so it would look already better. Our enterprise valuation to free cash flow ratio around 33 is also looking quite good for a small company. And in 2027, it could already be around 21. So I think this company can look undervalued right now if we expect the free cash flow to grow in the future as well. So I think it can be a good buy, but only if you really believe in the products and in this company and that they can continue to grow the free cash flow and the revenue in the future. If you found this video helpful, don't forget to like and comment and subscribe for more content.